This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, December 8th, 2014. Euro dollar. So the market has broken down to yet another fresh 2014 low, with the break below 23.58 exposing the 2012 base at 120.40. Ultimately, the market remains locked within a well-defined downtrend, while only back above the 50-day moving average at 125.50 would compromise the current bearish outlook. Sterling dollar. Cable has broken down to a fresh 2014 low below 155.85, with the break now exposing a measured move objective into the 153.50 area over the coming sessions. Ultimately, only back above 158.25 would take the pressure off the downside. Dollar yen. Dollar yen has broken to yet another 7-year high, trading up to 121.85 on Monday ahead of the latest minor pullback. Technical studies are well extended across the board, across the daily, weekly, and monthly timeframes, but the market will need to break down below the 10-day moving average to compromise the intense bullish outlook. The 10-day moving average in dollar yen currently comes in at 119.20, so a break below there, a close below there, would be required to trigger the onset of a correction, although the underlying structure continues to remain intensely bullish. There is risk for some form of a correction to seek out a fresh higher low, but again, a break below the 10-day moving average will be required to take the immediate pressure off the top side. Euro Swiss. Euro Swiss is locked within a tight trade since recovering off of fresh 2014 lows just shy of 120 at 120.09, but the market will need to break back above 120.45, the previous September base, to take the immediate pressure off the downside. Aussie dollar. Aussie dollar continues to extend declines to fresh yearly and multi-year lows, now trading down below 83, with the market focused on the most recent measured move objective, which comes in around the 81.70 area. Ultimately, the structure favors continued weakness towards major psychological barriers at 80, with any rallies now seen very well capped by that previous support, now to turn resistance in the 85.50 area. Dollar CAD. Dollar CAD has recently broken to a fresh 2014 high after recently taking out 14.67 on Friday to trade up to 14.75. The break now opens the door for a push beyond 115 and towards the measured move objective at 117.50 further up. Ultimately, only back below 11.91 would compromise the bullish outlook for dollar CAD. Kiwi dollar. Kiwi has finally broken down below its bearish consolidation range low at 76.60, and the break now opens a measured move downside extension, which exposes the 72.85 area over the coming days and weeks. Ultimately, only back above 80.35 would compromise the bearish outlook, while deeper setbacks are eventually favored below 72.85 and towards 70 further down. SPX 500. The SPX 500 recently broke to yet another record high at 2080 on Friday, ahead of the latest minor pullback. There is the possibility, given stretch studies, for a double top formation on the daily chart, but the market will need to break lower and take out 2049 imminently, that's the low from the 1st of December, to confirm this double top formation and open the door for deeper setbacks. Inability to take out 2049, or inability to even break lower significantly from current levels, will keep the pressure on the top side, with the market focused on more significant gains to fresh record highs up towards the next key psychological barrier at 2100. Gold. Gold is really locked right now in the middle of key range between resistance at 1256 and support down at 1131 from the 2014 multi-year low, 4-year low at 1131, going back to the 7th of November. The market will need to break above 1256 or below 1131 for the next directional insights, but the downtrend remains firmly intact, with a lower top sought out at 1256 ahead of bearish continuation. Ultimately, a break back above 1256 will be required to compromise the medium-term bearish outlook in the gold market. That's all for today. Have a good one.